Global financial markets experienced extreme volatility today as the escalating war involving Iran, Israel, and the United States sent shockwaves through energy, commodity, and equity markets worldwide. The most dramatic movements were seen in oil markets. Crude prices surged sharply earlier in the day as traders reacted to the risk of major supply disruptions across the Middle East. Brent crude briefly climbed close to $119 per barrel, while West Texas Intermediate jumped above $118, marking one of the biggest single-day moves in years. The spike represents the strongest rally in oil prices in more than 4 decades for U.S. crude benchmarks, with prices surging more than 25 to 30% during the session as investors priced in a massive geopolitical risk premium. The surge was driven largely by fears that the conflict could disrupt energy supplies flowing through the Strait of Hormuz, the narrow waterway through which roughly 1/5 of the world's oil supply normally passes. Shipping disruptions and security concerns around tanker routes have already begun affecting oil flows from the Gulf. Analysts estimate that millions of barrels per day could be removed from global supply if the conflict continues to escalate or if the shipping corridor remains unstable. Energy markets also reacted to reports that several Gulf producers have reduced output amid the escalating conflict. Production adjustments in countries such as Iraq, Kuwait, and other regional producers have added to fears of tightening supply across global markets. However, oil prices did not move in a straight line. After the initial surge, crude prices pulled back sharply later in the day following comments from U.S. President Donald Trump suggesting that the conflict with Iran could end very soon. The remarks triggered a sudden reversal in oil markets as traders reassessed the possibility of de-escalation.
Thank you, Mr. President. On Iran, you called it an excursion. You said it would be over soon. Are you thinking this week it will be over?
No,
Are you talking
but soon.
about days?
I think soon.
Okay, and with respect
Very soon. Look, everything they have is gone, including their leadership.
As a result, Brent crude retreated toward around $91 per barrel, while US WTI crude fell back to roughly $88, illustrating the extreme volatility currently dominating energy markets. Despite the pullback, analysts warn that oil prices remain highly sensitive to developments in the Middle East and could spike again if attacks target additional energy infrastructure or tanker routes. The turbulence in energy markets has also had a ripple effect across other commodities. Gold, traditionally seen as a safe haven asset during geopolitical crises, initially surged as investors rushed to protect their portfolios. However, the rally did not hold. Gold prices later fell more than 1% as the US dollar strengthened and traders reacted to shifting expectations about interest rates and inflation. The stronger dollar made dollar-denominated commodities like gold more expensive for international buyers, putting downward pressure on bullion despite the geopolitical turmoil. Other commodities also reacted to the shock in oil markets. Agricultural commodities linked to biofuel production, including vegetable oils, rose sharply during the session, as higher crude prices increased demand for alternative fuel inputs. Meanwhile, industrial metals such as aluminium climbed to multi-year highs amid concerns that supply chains could be disrupted by the broader geopolitical crisis. Equity markets across the world also reflected the growing uncertainty. Stock markets in Asia, Europe, and the United States traded lower earlier in the day as investors reacted to rising energy costs and the possibility of a broader economic shock. Analysts warn that a prolonged oil supply disruption could push inflation higher and slow economic growth globally. Major financial institutions are already warning about the potential consequences. JP Morgan analysts say the conflict could trigger a 10% drop in the S&P 500 if energy prices remain elevated and geopolitical tensions continue to escalate. Governments and international institutions are now discussing emergency measures to stabilize markets. The Group of 7 countries and the International Energy Agency are considering releasing strategic oil reserves in an attempt to offset potential supply shortages if the conflict continues to disrupt exports from the Middle East. Across global markets today, the message from investors has been clear. The Iran war has introduced a major new shock to the world economy. With oil prices swinging wildly, gold reacting to currency movements, and stock markets struggling to price in the geopolitical risks, financial markets are now closely watching every development in the Middle East for signals about where the global economy may be heading next.